Good day. Welcome to another session of Folk Tutorials. Today we continue with our lesson on bank reconciliations by taking a practical example, and then we'll see how to go about solving a practical illustration. Okay, so straight away let us move to the question and then try and read it together. Mrs. JB Enterprise received a bank statement from its bankers for the period 1st to 31st March 2014. The balance as per the statement was $792,000, while the cash book showed a balance of $1,219,200. On thorough examination of the books, the following were detected. A. The bank had debited Mrs. JB with an amount of $15,000 in error. Okay, so that is a wrong debit. Then B, take note of that. That is a wrong debit. The A is a wrong debit. Then B, checks drawn in payment to creditors to a total value of $210,000 had not been presented for payment. C, various check lodgements to the bank amounting to $300,000 had not been reflected on the bank statement. D, the bank had the following items on record, but they were absent from the cash book. Standing order payment of $60,000. Bank charges $25,000. Dividend received $17,800. Interest on overdrawn account $10,000. Bank loan deduction $200,000. E. The cash book balance was detected to have been overstated by $45,000. You are required to I. Adjust the cash book balance. II. Prepare a bank reconciliation statement. This is a very simple question that we are going to solve. We are required to prepare an adjusted cash book and a bank reconciliation statement. And so I'll straight away start with the adjusted cash book, and then we'll come back and pick the items one by one again from the question. So Mrs. JB Enterprise. Okay, so this is the adjusted cash book, and then we always begin with the balance as per the cash book in the question. And so we are told in the question that the cash book showed a balance of $1,219,200, and so that is at the debit side. So we have a balance brought forward of $1,219,200. Having written the balance, let us go back to the question and let us pick out the items that will appear in the adjusted cash book, and let us know the ones that will also go to the bank reconciliation statement. So we are back to the question. We are told that on thorough examination of the books, the following were detected. A. The bank had debited Alhaji Ola with an amount of $15,000 in error. This is a wrong debit, and wrong debit will not appear in the adjusted cash book. This one will go to the bank reconciliation statement because this one was committed by the bank. So we skip it and we mark it down as a wrong debit. B. Checks drawn in payment to creditors to a total value of $210,000 have not been presented for payment. This is very clear. This is unpresented checks. And whenever you see checks drawn, it means that we wrote the check. And so this one is so clear that it was not presented. And unpresented checks will not appear in the adjusted cash book. So we'll take that to the bank reconciliation statement. So you mark out that as well. C. Various check lodgements to the bank amounting to $300,000 had not been reflected on the bank statement. Now this is check lodgement. We have deposited into the bank, to the bank, that they should credit our account. That is the meaning, and it has not reflected on the bank statement. This is uncredited checks. So let us know the difference. This is uncredited checks. And uncredited checks will not be in the adjusted cash book. It will also appear on the bank reconciliation statement. And so let us mark out that as well. Then D, the bank had the following items on record, but they were absent from the cash book. So there is a standing order payment of $60,000. And so standing order payment will appear here. We have bank charges of $25,000, dividend received of $17,800, interest on overdrawn account of $10,000, and finally a bank loan deduction of $200,000. And so all these items, we are told that they were on record at the bank but were absent from the cash book. So this question is so simple that we are going to put all these things on the adjusted cash book. And so the standing order payment, we start from the standing order payment. It appears here on the credit side. So the standing order is $60,000. And then we are told of the bank charges, which is also $25,000, and also appears on the credit side. Bank charges, $25,000. And then there is dividend received of $17,800. And I told you that dividend received will be on the debit side. So dividend received, $17,800. And then there is interest on overdrawn account of $10,000. Now this is the meaning. The interest on overdrawn account is interest on overdraft. The bank made an overdraft, the business made an overdraft or took an overdraft facility from the bank, and the bank is now charging the interest. And when they are charging, it's to the debit of your bank statement. That means that it's supposed to be credited to the adjusted cash book. So there is interest. This is interest debited. So interest debited. That is 10,000. Okay. And then there is a bank loan deduction. The bank loan deduction is $200,000. Now, it means also that the bank is now deducting. There is a loan that the business has taken from the bank, and now the bank is deducting from their account, and so it will reduce their balance. And so bank loan deduction will also be here on the credit side, and the amount is $200,000. That is it for the items that were listed here. Then we move to E, which is the final one. The cash book balance was detected to have been overstated by $45,000. The cash book balance was detected to have been overstated by $45,000. And so when we say that the cash book balance is overstated, we know that this side is where the balance of the cash book is. And we know from correction of errors that when you overstate an account, you record at the opposite side of the balance, where there is a balance, you record at the opposite side to cancel off the overstatement. And so this is an overstatement on the cash book, $45,000. So we are going to credit the cash book so that the overstatement of the balance will be cancelled. And so we see error, or we'll just call it suspense overcast, 45,000. And ladies and gentlemen, this is the last item, and so we are done with preparing the adjusted cash book. And so we'll balance it off, and then we'll find the total. Then the total is $1,237,000. $1,237,000. Now this side is the bigger side, so we put the total at the same side, and then we find a difference, and we call it a balance carry down. And the balance carry down is $897,000. And so this balance will be brought down as balance brought down, $897,000. And so, ladies and gentlemen, this is where we end the adjusted cash book. And so the next requirement is that we should prepare a bank reconciliation statement. And so we'll say bank reconciliation statement. As at 31st March 2014. So we show our currency signs. Okay, so we start with the balance of the adjusted cash book balance. And so we'll see balance as per adjusted cash book. Let me show my currency signs here. That is 897,000. That is the balance that we got from our adjusted cash book. And now we go back to the question and pick the items that we said will appear on the bank reconciliation statement. That is item A, B, and C. So we know from the format that we add unpresented checks straight away. So add unpresented checks. And from the question, the unpresented checks value was 210,000. That is item B. Checks drawn in payment to creditors to a total value of $210,000 had not been presented for payment. Okay, so we add our unpresented checks, and the value for unpresented check is 210,000. So we add it up, and then we have a total of 1,107,000. Now, mind you, I brought unpresented checks straight away here because there was no wrong credit attached to it in this question, and there was no errors to be corrected. So straight away we add up only the unpresented checks, and then we come and less things that we are supposed to less. And the first thing we know to less is the uncredited checks. And in this question, there was an uncredited check of $300,000. $300,000. That is the check lodgements that were not credited. Now, I brought it here because there was a wrong debit in the question. Item A says that the bank had debited Mrs. JB with an amount of $15,000 in error. And so that is a wrong debit. $15,000. And so when we add up $15,000 to $300,000, we have a total of $315,000. And then we are going to reduce that from this total. And when we do that, we have a balance of $792,000, which is the balance as per bank statement. And ladies and gentlemen, this is the same balance that was given in the question. We are told in the question that the balance as per bank statement was $792,000. And so after solving your question, if you don't get the same balance as what has been given to you in the question, then it means that you made a mistake somewhere. And that is why you were not able to do a proper reconciliation. And so this is just a question to help your understanding. In our next video, we will try and look at more complex questions involving errors. And then we will look at how to better understanding and become masters of bank reconciliation. Thank you so much for watching. Remember to subscribe to my channel and then watch out for more videos. Bye bye.